What's going on, guys? Welcome back to the channel. And in today's video, what we're going to be talking about is market crashes and market dips, and more specifically, what I'm doing with my money during these situations. And we've seen over the past few weeks, the few days on the stock market, it's been red. Things haven't been looking great, and the prices are dropping. And honestly, I look at this like, hey, things are on sale right now, so I need to put my money to work. I need to start utilizing that. And I'm gonna be talking about all of that in this video and more generic information about these stock market dips, these crashes, just to give you guys some insight, because I know so many of you out here are brand new to investing and maybe you haven't experienced it before. So I wanna make sure that I cover it for you guys. And without further ado, let's jump in. All right, now listen, if you guys are brand new to this channel, you haven't been here before, well, welcome. My name is Dalton and this is dlitztv. On this channel, we talk about all things investing. And like I said, we're specifically focusing on market crashes, market dips in this video, and what's going on currently with the market. So a lot of people who are getting into investing now, we've seen the all-time highs of the stock market. The prices have been extremely high for a lot of these stocks, and sometimes these stocks are often way overvalued, and people are valuing into the future for them. So with me, with my investment style, guys, I don't make any penny plays. I don't try to day trade, swing trade, any of this stuff. I make these long-term decisions that I'm able to buy and hold my stocks and not necessarily worry about them. What I like to do is invest in dividend companies who, even when the stock market goes down, they'll readjust their dividend payments so they're paying you the same amount they would have if their stock price was high. And basically what this does is it allows me to feel more confident with my investments, continue making money even when the stock market goes down, because what we've found in the past is that the stock market tends to always bounce back, recover much higher than its previous highs. And I think over like a 10-year span on the stock market, it's tough to find a time period where if you started investing 10 years ago, you actually would have more money in the market than you would have had now. So just keep that in mind, guys. I'm a really, I guess, logical investor when it comes to putting my money into the stock market. I don't take these massive risks. And I know a lot of people want to take these risks when you're younger. You know, that's great. I've tried some things, it hasn't worked. So that's why I've settled on long-term dividend investing. And honestly, it's where I've seen the absolute best results. All right, so we know that the stock market has been dipping over the past few days. And kind of when I saw some of these larger gaps in terms of percentage down for some of these companies, I decided, hey, now is the time to get in, to take advantage of some of my money. The only problem is I have a few bank accounts right now that are unlinked, that I just opened up brand new business accounts and I've been switching banks. So unfortunately, I don't have access to all of my funds that I wish I had so I could put more money into the stock market. So when I recognized this happening, what I did was I took $500, dispersed it among a number of different companies. And as soon as my funds settle in the other bank accounts that I'm talking about and they're linked up with my various applications, I'm going to be investing that money. And that's just a reason why having cash on hand is so important, so you can take advantage of any dips, of any crashes, and utilize your return and maximize your profits in the long run. So for example, this is my Robinhood portfolio. This is one of the accounts that my bank was actually linked to. So what I decided to do was look at the stock market, identify some of those stocks that were crashing, and see if I could make some pretty decent plays, because most of these stocks, if not all of them, are ones that I'm holding for a lot longer than 10 years. I really hope that I never have to sell these, but that's exactly my mindset behind it. So I did invest in Tesla. Tesla has been dropping for a while. If you look over the past month, I believe they're down 23% in Tesla, and it's sub $700. These are levels that we haven't seen for a very long time. And me being a long-term investor looking at Tesla, I mean, their price doesn't necessarily reflect where their company is at today, but if you take into account the future value, there is so much potential in a company like Tesla. I know that you guys believe it too. I know that I don't really need to recap that for you, but if you look at this, it's down 20%. I mean, in that aspect alone, I consider investing more. Now, when it comes to my individual investments, people ask me oftentimes, hey, you start seeing a stock dip, what are your thoughts around reinvesting? When does that point kind of cross your mind? And what I like to do is anytime I see a stock in my portfolio down below 10% of what I put in, then that's when I like to start investing more and more. And I really try and maximize, because think about it, theoretically, if you're investing in these prices that are 10% higher, it drops 10%. If you valued it at 10% higher, you like where the company is at, then when it's on a discount at 10% cheaper, why would you not invest into it? It's super important to just keep a level head and just be smart about some of these investments that you're making. So again, I invested a little bit into Tesla's, around $100. The other companies that I went into is AT&T. AT&T is one that I'm just trying to get around 100 shares on. And somebody recently asked why you might want to get 100 shares of a company in one of my videos. This is a goal for a lot of investors so they can do a strategy with options trading, which essentially allows you to sell covered calls or covered puts. And basically it's like almost guaranteed money, and it's weekly, or you can kind of cadence it however you want. And I'm going to be talking about this in the future. So if you're interested in learning more about covered calls, covered puts, and all of that, make sure that you are subscribed to the channel. You got the notification bell on so you can be alerted when that video comes out. But again, this has been on the dip. So I picked up actually a little bit today. If you look at it over the past week, I mean, it's only down 2.54%. This is one of my longer term ones that's been down for a while. So you see AT&T, if you look at their chart, you're like, wow, man, like they're not doing so hot in terms of where their price is. You got to remember the dividend yield on AT&T alone is 7.08%. So even if it's stable, like if you look over the past year, it's been hovering around this value right here, 28, 29, 30 bucks, goes down a little bit. And then it kind of bounces, but it's staying stable. You're still capitalizing on around a 7% return from that dividend payment alone, which is really nice. So actually every time that I'm paid a dividend in AT&T, I make enough to buy a share and extra. So anytime I'm paid a dividend, I basically take that money, I reinvest it, and I get more and more. So AT&T was another one. I picked up just a little bit of AT&T. One that I actually wish that I picked up, and this is what I'm going to probably spend some money on when I get access to it, is Apple. And I can see right now they're kind of recovering from the dip. They're down 3.9% on the past week. Over the past month, we're down 13.57%. And with Apple, like this is one where you never really see Apple dipping too low. And what happened was there was a stock split on Apple. And I believe that in the year after a company has a stock split, what you tend to see is that they finish on average, I believe it was 6 to 14% greater than whatever the actual market does. So if you didn't know, Apple went through a stock split. A lot of you guys were commenting on previous videos that I've posted saying, I don't remember a time where Apple was up over $300, $400. But before the stock split, they were up over that value. And then basically each share that you held of Apple got split in different ways. So you had more, but the stock price was worth less at that time. More companies that I'm considering investing, even if you just go into my generic portfolio and start looking at these, so many of them are down right now. I always scoop up just a little bit of realty income. Right now, my total return, I'm down $72. But again, I'm paid monthly dividends on this, and I've definitely made over $72 in dividend payments alone from realty income. So theoretically, I'm not really even down on this company. So if you look at them, they're dipping a little bit today, but honestly, like they're up a little bit over the past month. And over the past year, again, another one down 24%. So you might be looking at some of these things and you're like, why are you investing in them? Their price seems relatively stable. But if you go longer term out, like even at the past 5 years, they're slightly up from 5 years ago. There's a lot of room for this company to recover and do well, especially post-pandemic world. And that's kind of where my mindset goes with a lot of these, is kind of post-pandemic, where I see them headed. And another thing that I want to talk about briefly is something that I've been doing in the M1 Finance application. So not too long ago, I put out a tutorial video on M1 Finance, and I actually structured out my own individual growth portfolio. You guys can check it out. Links are in the description if you want to look at the investments. And heck, if you wanted to invest in it, you could do that too. Just make sure you're doing your own research. Again, not a financial advisor. But looking at this, I put $2,500 into this portfolio about a week ago, and we're at $2,312, down 8.6%. So basically, a lot of the stocks in this portfolio, because I invested that $2,500 when it was at these all-time highs in the stock market, a lot of them have dipped pretty significantly. So does that worry me at all? No, that is good news for me because I'm going to continue investing in these. And that's what dollar cost averaging is driving down the cost of these. So that way, when the market recovers, you're going to be set. You're going to make money much quicker. And again, just because it's down around $200 right now, I'm probably still going to be investing a significant amount of money. What I look to do with this portfolio is put in around $300 every single week for as long as I can sustain that. And you know, that is the absolute best method in my mind. And if you guys didn't know much about M1 Finance, basically how it works is you invest in these and it automatically distributes the money based on the stocks that you pick. So I have a few different sectors in my portfolio, and within those sectors are different companies that it automatically invests in. So at the end of the day, and in conclusion, what I just want to get across is that when the stock market dips, I don't panic. I'm actually a little bit happy for selfish reasons, not because the economy, it's an indicator of them and how it's doing, but more because I'm able to capitalize on the money I can put into the stock market and I can make more in the long run. So if you're looking at it, you're a little bit worried, you know what, guys, just take a step back, take a breath, justify your position, look at it, understand if this company has value 10 years from now, if you see them growing, if their financials are looking good, their company looks solid, you like the management, what's going on, you don't always need to worry. You can actually kind of double down with a lot of your investments and make more in the long run. So if you guys did take anything away from this video here today, I would really appreciate it. If you click that like button, it means the world to me, helps promote my channel, get it out on other people's homepages, and just, you know, promotes me. So thank you so much for checking out this video, guys, and have a great day.